What's up, YouTube? Welcome to the Mortgage Millennial. My name is Chris Irving. I'm a loan originator in the state of Florida, and I make videos to simplify the home buying process and give you all the information you need to know before you buy a home. The reason I decided to make this channel was because as a loan officer, I can't count how many times how many friends or family members or friends of friends reached out to me about buying a home and how unprepared they were. They'd already be working with a real estate agent, falling in love with the home that they saw on Zillow before they even knew what a mortgage was. Now, obviously, the home that you're gonna buy is very important. However, the mortgage that you're going to be getting into is very important as well. In fact, the study shows that over a third of Americans have no idea what fees should cost when getting a mortgage. And on top of that, about 65% of Americans will plan on buying a home at some point in their life. That's when I decided I got to start dropping some knowledge. So if any of this seems valuable to you, go ahead and hit that like and subscribe button so we can grow this channel and spread more information to more people like us. So in today's video, we're going to go over what exactly points are. And as a bonus for watching all the way through, I'm going to show you how to determine whether or not you should be buying points. So first, let's get on the same page. At this point, you probably already got a loan estimate from one of your lenders that you're working with, and you're looking at the second page and trying to make sense of all the fees. Then you came across this fee listed as points or percentage of the loan amount. Now, what are points? By definition, points are basically an upfront fee you pay to lower your interest rate. And by the way, it's very obvious, so don't let a lender tell you otherwise. And honestly, it's so easy to calculate points. I think the verbiage is what tricks people because points can be referred to as discounts points or mortgage points. But honestly, points are just simply a percentage of the loan amount. For example, if your loan amount is $100,000 and the lender's charging you 1 point or 1%, you pay $1,000 in points. And really, that's all you need to know when determining what points are. Now we need to discuss whether or not it makes sense for you to buy points. And like I say in all my videos, there's no one-size-fits-all approach to real estate or mortgages, and everyone's situation is unique. When you're gonna determine whether or not you're gonna buy points, you should consult with a professional and tell them your goals, and they'll make sure you align with the goals, or they should. Rather than just listen to someone else who was in real estate maybe decades ago, and when they hear the word points, they turn into negative Nancy or something and try to convince you that points are terrible. Let's call a spade a spade. If points were really as bad as people try to make them out to be, do you really think that lending companies or banks would actually offer them? Wouldn't they never get sold because, you know, everybody's review of them was terrible? I don't think so. What most likely happened to the person that's telling you not to buy points is they either got some misinformation from someone else and they're basically just paying it forward, which happens a lot in this industry, unfortunately, or they bought points without using any calculations or strategy with the points. And honestly, either way is a recipe for disaster. So what calculations do you need when you're determining whether or not you need to buy points? Luckily for you, I made us a free spreadsheet that I'm going to leave in the description below. And the only thing I ask in return is if you like and subscribe to the channel. And if you already did that already, go ahead and leave a comment on what state you're viewing these videos from. It's pretty cool to see what state my video is reaching you guys at. Now, before you download the spreadsheet, I'm going to give you an example of how to use it. All right, so I brought the laptop up, and basically when you get this spreadsheet downloaded in the description, you're gonna see my face here and basically my Instagram account. So if you guys can follow me and subscribe, that'd be great. But let's get into the point calculator. So first thing first, when you download the spreadsheet, the only thing you need to change is what's in yellow or light yellow, whatever color you wanna call it. Anything in gray or white, don't touch it. The only thing you need to change is what's in yellow. First, you're gonna determine your mortgage balance. So to keep it simple, let's say your mortgage balance is $100,000, okay? And then now we're gonna determine your term. Term is basically how long you're gonna be in the mortgage for. And in this case, let's say 30 years, but there's 20-year mortgage, 15-year mortgages. It goes by a 5-year increment. Now, what is a par rate? Par rate, you need to ask this from your lender. Par rate is basically your rate without any points. This is important. You need to know this, and every lender has access to give you that. Sometimes they show you the rate with points so they can give you an appealing interest rate, but they'll be transparent when you ask them for your par rate. So let's just say your par rate is 3%. Okay. Now, your 3% interest rate is the par rate. So that's going to be the rate you qualify for without anything. And now interest rate with points you have to figure out. So let's say you want to get down, you really want to go down to 2.5 interest rate. So let's just say that's your interest rate there. And Now, when you ask your lender, well, how much is it going to cost in points for a 2.5 interest rate, they're going to give you a number, okay? And like I said before in the beginning of the video, points are going to be 1% of your loan amount. When you ask your lender what are the points for that you have to pay for a 2.5 interest rate, they're going to give you a percentage or a dollar amount. In most cases, they give you a percentage. So let's just say they're going to charge you 1.15% in points. Okay, so now your dollar amount in points is basically the fee. This is how much you have to pay up front, $1,150. Now, here's part 2 of the calculator where it says par P&I. Par P&I is your monthly mortgage payment that you would pay if you don't pay any points, okay? So for $100,000, your monthly mortgage payment, remember this is without taxes, insurance, homeowners association, or whatever other fee you can have on your mortgage. This is just principal and interest. The par mortgage monthly payment, $421.60. To keep it simple, let's say $421. This par rate is going to be your 3% interest rate, your payment there, and then this payment with points is going to be basically how much you'll pay monthly on your mortgage if you take the 2.5 interest rate. And then now it's going to show you basically the difference between what you'll pay monthly with points and without points, and that's $26. So in this case, it's saying it's going to take you about 43 months to actually break even, which to keep it simple, I put the years here and it says about 3 years and 6 months. So when you find that, now you have to determine whether or not it's going to be beneficial to break even. This is the important part right here. Your future forecast. How many years do you actually plan on living in this home? If someone was planning on living in this home for, let's say, 5 years, which is the average, this is how much you'll save when you're buying down points. $438. Now, that worth it? You need to ask yourself that. So in this case, this is your answer to your question. I can't answer that for you. For me, that's not really worth it. I'd keep the 3% interest rate if I'm only going to stay there for 5 years. Let's say in points, let's say they're only charging 0.25% in points, and in this case it's very common. That's $250, and it'll take you 9 months to break even. For me, I'd say it's a good idea to actually buy points. And then for me, you'd have to consider as well the loan amount. I did $100,000. It's rare you're gonna find a home with $100,000 in the state I live in, which is Florida, where the average house is about $315,000. Now let's see the numbers there. 5 years, I'm going to save $4,200 in a home in Florida, and I'll save about $83 a month. It's only going to take me 9 months to break even. In this case, it's going to be a good idea to actually buy points. So this is what you need to consider when you're actually looking to buy down points, is when you're going to break even or how long you actually plan on living in a home. When you ask somebody actually whether or not you should buy points or not, the next question you need to ask yourself is, how long does it take for me to break even, which your lender should be able to provide you that information. And then how long do you plan on living in this home? When you have these questions answered, then you can determine whether or not points is a good idea for you. So I can't give you that answer. Your lender may not be able to give you that answer just because they don't really know how long you plan on living in this home. And chances are the average lender, they're not doing things like this, like providing spreadsheets for the future forecast for their clients. There are good lenders out there that do that, but when you take this information here that I'm going to give you for free and then you take it to your lender, you'll be able to answer these questions for yourself, because at the end of the day, you're the person that's going to pay for the mortgage, the real estate agent that you're going to work with, the lender that you're going to work with, the person that you're buying the home from. Their goal is to make money, okay? So if you're qualified to get a home, they're going to do what is best for them to actually make the commission on that sale. You have to do what's in your best interest. I don't care how nice the person is that's on the phone with you, that's your lending company, and I don't care how beautiful the real estate agent is. You have to do what's best for you, because as soon as you walk in that door and that first month bill is due, you're the only one that's gonna have to pay it, okay? Hope you guys found any value in this information. If you have any questions or suggestions in my next video, go ahead and leave a comment down below. If you haven't done so already, make sure you subscribe. I'll see you guys next time.